All right, so today I'm honored to have Tom Croteau of Operfi Capital with us. Operfi Capital is a factoring company that provides capital via invoice factoring to truck drivers and freight brokers, of course, and he's going to help us understand how Operfi works, what services they provide, who they serve, and how factoring companies evaluate freight brokers and shippers prior to any extension of credit, right? So
Absolutely.
thank you so much for being with us tonight, Tom. Let's start by telling us a little bit about yourself and what moved you to start Operfi.
Absolutely. Brandon, Dow, thanks for having me, gentlemen. So my name is Tom Croteau. I'm the owner and founder of Operfi. I have been in the transportation logistics space for over 10 years now. Prior to that, military experience. I was in the Air Force working for an Air Mobility Command, where I got my first taste of logistics. I branched off. I went to business school. I studied entrepreneurship, and straight from there, I started working in logistics space. So I started at a very small entrepreneurial logistics company. We had 4 employees. We had a small brokerage division. We had a factoring division, and we had an asset base where we did all of the safety and compliance for about 40 trucks. The logistics division, probably when I started, they had about maybe 50,000 that we were doing on a monthly basis. We grew that entity to doing over $1 million a month.
Wow.
And at the time that I left, and I gravitated. I was in charge. I was the VP of operations on the factoring side of things, and so I got a lot of experience working hand in hand in both organizations. And it was a great opportunity. We grew the factoring division. We had over 500 clients. They became an acquisition target. I decided that kind of my time was done. I wanted to branch off. I saw a lot of inefficiencies in the factoring space in general. I branched off. I started Operfi maybe a little right around 3.5, 4 years ago. A couple of things that I was kind of passionate about at that time. Number one, my military background. I wanted to work with veterans, and so that's something that kind of makes us unique is providing veteran discounts. But number two, I saw an opportunity where most factoring companies, the traditional model is quantity over quality. They're not training their clients to become better business owners. The way that I see it, if my clients are trained to be a better business owner, it makes a more sustainable relationship, better quality carriers and clients. That you turn a 1-truck business owner into a 10-truck operation by providing them that communication and the support. And I think the traditional model is really lacking that, where 85% of new trucking companies fail in the first year. I saw that as kind of a unique value add. So one thing that kind of we do and try to do is just educate, train our clients. When they get onboarded, try to provide them with a training module that kind of walks them through all the things that they're going to experience. And so passionate about, and I've also, participated in training classes. I think what's going to be relevant today is we get a lot of insights into, especially for your students and your business partners, how a factoring company evaluates the brand new broker. I think that there's a lot of factors that are out there that like to communicate the information, but they won't tell you how it's done. And right. So that's kind of, hopefully I can provide a little bit of insight and value there. If it turns into having opportunities to work with some of your students, great. But at the end of the day, I'm all about just education and more training.
Sounds great, man. Sounds great. If you will, Tom, tell us a little bit about invoice factoring, how it works.
Great. Yeah. So how it works is, and the big thing, and I'm sure that your students, they know what factoring is. The important thing to understand, no one is reinventing the wheel. Factoring has been around it's one of the oldest forms of lending, where you have a receivable and you're basically getting an advance on that receivable that's being collected by the factor, 30, 45, 90 days, whatever it is. But essentially you have a service provider that is providing a service where typically it's in a working capital intensive industry. So the trucking industry, as we know, you have an insurance payment, truck payment, fuel costs. You got to feed your kids. You got to pay yourself. You've got all these payments, and you have to figure out how you're going to get the money for the next load to be able to keep all that working capital in house. And so, right. Us, the factoring company, our unique value is that we have strong investors and banking relationships, so we can advance you on day one. But the other thing too, a lot of mom and pops and a lot of smaller businesses, they don't have the administrative support, right? If I need it as starting off my business, I would have to go out and hire somebody or do it in-house. And sometimes you need a little bit of that support piece where the factoring company, and here's where I'll differentiate, because the factoring company should provide you that support, because there's a lot of them that don't. And so hopefully I can take the stance of what a factoring company should be doing for your business, as opposed to, because I'm sure probably a lot of people have a bad taste in their mouth. So we provide our capital, we buy the invoice on day one. Prior to that, we make sure that we're doing credit checks on their customers, making sure that they're diversifying their portfolios with their customers, doing the invoicing, billing, collections on their behalf, so then that way they can focus on their core competency, which is trucking.
Okay, sounds good, man. So what is the difference, Tom, between factoring a broker and factoring a trucking company?
No, that's a great question. So I think that factoring a trucking company is I think one that's easier for everybody to understand, because it's, and I think that most people getting into the industry and getting into the business, they start out either on the trucking side, and so they've worked with a factoring company. They know that the factoring company is billing the broker, they're doing the credit check, collecting the payment. The big difference, and there's two big differences on factor brokering factors versus trucking factors. The one big difference is that the factoring company is billing your customer, your shipper customer. And that's kind of similar to because I mean, the carrier side, your customer is technically your broker. And so they're billing the direct customer directly. And the second piece that is probably the primary difference is that the factoring company is required to pay your subcontractors, i.e. your carriers. And so when the factoring company on the brokerage side, they're managing both your accounts receivable with your shipper customer and your accounts payable with your subcontractors. So they should be billing the shipper, and they also should be paying the trucks, i.e. the factoring companies, if they're involved.
Oh, okay, cool. Now, how long have you been in the space now?
I've been in this space for over 10 years now.
Wow, cool. So you guys have a big customer base over there, relatively big customer base.
Yeah, I mean, it's all about establishing network relationships. For me, our model that we do is a little bit different than the traditional model as well, where our sales, nothing is in-house. So all of our referrals come from clients, come from agents, insurance partners, dispatch partners. And the reason why I kind of steered away from the traditional in-house sales guys, because the majority of them have, 22-year-old kids that are fresh out of college that are lying to somebody to get a commission. And so I would rather a referral that comes to us, as opposed to, having underperforming and then having an HR issue or something. So, but yeah, from that network that we've branched off, we get a pretty decent sized carrier base that comes in.
So let's say a trucking company or freight broker is interested in working with you. What does that qualification process look like?
Oh, that's a good question. Yeah. So the qualification process, a factoring company, there's always going to be some underwriting and due diligence. And so a factoring company there's another thing that's not really talked about, and I'll talk about the big one because it's the actual legal piece of what factoring is. There's something that's called a UCC filing. What a UCC filing, and some people probably know what it is, and they probably have a negative connotation against it, but hopefully I can clarify, it's not something that you should be scared of. I have one on myself and my business. So I have a bank that is lending me money. They have a UCC on myself personally, as well as my business. What that UCC is it's a collateralization of my assets. So the same concept of when we go out and finance a vehicle at a dealership and we're working with a finance company, they're the first lien holder on the title of the vehicle. That's the same concept of what the UCC is. The factoring company will file a UCC on your business's accounts receivable. And what that is, it actually is the legal transfer that you're selling this intangible asset to the factor, so that they're legally purchasing the asset. And so that is part of those underwriting guidelines. They're going to be looking to see if there's a UCC. They do that because they want to see if their assets are encumbered in any way. Am I buying an asset of something that doesn't belong to me? So UCCs stay on you for 5 years. The factoring company has the ability to refile that after 5 years, and they get notifications and everything. And so that UCC is almost kind of, it'll constantly get filed until you fulfill your obligations with your previous lender. So for those of you where you started up a trucking entity and you have this UCC and you're trying to branch off and start a logistics business, but the last factoring company, they probably have a UCC on you personally, that the next factor goes and says, you know, hey, Brandon, sorry, I wish we could work with you, but you're still working with ABC Factors over there, it seems like, and they have a personal position. You need to get a release. So the UCC is something that's researched. Background checks are done. So now a good factor shouldn't be doing FICO credit scores that take a hit on your credit, but they are looking at bankruptcies. They're looking at liens. They're looking at judgments. They're looking at, are there any instances of fraud? Because in our space, we see fraud all the time. That's our number one thing that's talked about in all of our industry conferences. It's the number one thing that we talk about with our employees and training them on how to spot fraud. And so those type of underwriting pieces are going to come up and they're not necessarily background searches that are done, but they're more like public information. There's public records have federal tax liens, judgments, liens, and those type of things that are out there. And so there is that initial underwriting qualification that takes place to see, and then once you're kind of approved from that perspective, now it's, and on the broker side, they're looking at your customer base. Who are you working with? How diversified are you? Are you only working with one customer? What's the credit worthiness of your customer, and would you even qualify?
Okay. I'm glad you mentioned UCC filing, because I had an individual just called me about 2 weeks ago, and they were saying that they had a UCC filing, and they hadn't started working with that factoring company just yet, and they were interested in working with another factoring company, but the factoring company told them that they had a UCC filing. How do you navigate that piece of it? How do you get a release if there's a UCC filed already?
Awesome question. So a lot of factoring companies, and again, I think I prefaced our conversation with there's good factors and bad factors, right?
Right.
So a lot of times they have in their application that you authorize them to do this UCC filing. That a factoring company can only, and this is straight from our factoring attorney's mouth. He's the #1 factoring attorney in the entire country. Basically, if they do not have a signed factoring agreement, that UCC is null and void. So what they do is that they basically, hey Dal, hey Brandon, we've got this really great service. All I want you to do is just fill out an application, right? So you fill out the application, you get excited, you got the proposal, everything. So you just put the application in, and they'll tell you like, okay, yeah, we'll give you those details once you fill out the app. Well, on that app, it has on there in the fine print, you authorize us to file this UCC, but you didn't sign an agreement, right? So what they do is that helps them to lock you in, not as a client, but as a prospect, because in the process of you doing your navigating and finding another factor, now you decide, hey, I want to work with Tom over at Operfi. Well, then my underwriting team comes in and looks at this UCC, and we go, hey, you have a UCC filing on you. What's going on here? And you're like, I never signed anything. What's going on? So at that moment, a good factor steps in, contacts the bad factor or whoever did that filing, and basically demands, I need to see an agreement. Do you have a signed agreement? And a lot of times the answer is no. And so once they kind of get called out, then they have a legal obligation that they have to actually release that filing.
Now, I heard you mention earlier that about 85% of truckers fail within the first year. And for that reason, you provide some consultative services. How does that work? And what exactly do you provide there?
So what we try to do is a lot of it is hand holding, and a lot of it is because my business, my livelihood is based off of my client's livelihood. So for me, it's about educating them. We have a number of tutorials that we send to our clients and videos that our clients can review. What's a blind shipment? Why the importance of checking credit? Things to do when you have a claim, how to diversify, right? And just different scenarios to help educate them on problems that we see constantly on a daily. If I have a client who basically puts all their eggs in one basket working with a TQL or working with a particular broker, they're opening themselves up to risk and exposure. So we try to educate them why, because if there's a claim, then they offset on everything else. And if the insurance company, their job is to deny claims as much as possible, right? They're going to find anything they can to deny that claim. And so a lot of times I see that it's just a lack of education and also when it comes to your compliance. And so what we do is we monitor our carriers' authorities, and if there's any freight guard reports on them, if they have bad inspections, if their authority has any negative remarks, we'll reach out and try to be proactive and say, hey, maybe you need to talk to a compliance guy because this is going to take a hit on your insurance. And then when you come up for your annual, you're not going to be able to afford the down payment and the premiums are going to be through the roof. So I think it's all about just having that constant communication with our clients and educating them. So then that way they are better prepared to navigate those obstacles.
Okay. Now, Operfi sounds like it has like a little military connotation to it. Tell us a little bit about the uniqueness of that name. Where does that come from?
Yeah, so and because of my military background, and the other thing too is that there's a lot of like the FI is thrown out there a lot as far as like kind of new age finance, and so I thought that the name is Operation Finance, and so I thought when we started it how creative it would be to kind of tie in that military undertone of Semper Fi. So we've got Operation Finance. I've got our logo is kind of yellow and black, so we got some Army in there. I'm Air Force. So the other one that's really not represented is Navy. So I feel bad for that, but maybe I can figure out a way to do it.
All right, man. Tell us a little bit about how do you determine the credit limit for a trucking company? If a trucking company say, hey, we want to come and start working with you guys, I'm one truck, one employee, how do you determine what those credit limits are?
So that's an awesome question. And not a lot of people realize that when you sign up for a factoring company, one of the things, if you're students and viewers, I have a factoring checklist, all the things that factoring companies don't want you to know about. One of those is credit facility. So I have seen factoring companies that for a new trucking operation sign up and they will give them $100,000 or $300,000 credit facility. There's no way in hell a one truck operation, if it's a hot shot, can do $300,000 worth of credit. But the reason why they do that is because they have buyout clauses within their agreement that basically says that if you want to get bought out, then it's going to be 2% of your factoring facility. So if they've given you a $300,000 limit and you might not be able to connect those dots, right? You might just be signing up and you don't know that they gave you a $300,000 limit, but all of a sudden that 2% of your factoring facility and they gave you a $300,000 limit, you're staring at a $6,000 buyout. So
exactly.
how we do it for a couple of different ways. Our standard factoring credit limits are based off of, we start off at 30,000 per truck. And the idea and the methodology is that a one truck operation, and again, hot shots versus reefers, you have team drivers. And so there's always exceptions that you kind of have to give some wiggle room because some can have more earnings potential than others. But the general idea on average, a good trucking company can do 5,000 a week. So if they're doing 20,000 in a month, why we do that 30,000 limit is it gives them an additional 15 days of credit. So what that does internally for us is that if they've hit $30,000, it tells us a couple of different things. Well, it tells us four things.
Okay.
One, it tells us that Operfi is not collecting, right? And that would be, so if we hit over the 30,000, what's going on? Is there a broker issue? Is there a shipper issue? Did we invoice the wrong party? It might be an issue on us that we have to resolve. And so we can obviously, in that scenario, you make accommodations and you increase your credit limit because you realize it's our mistake. Two, there is double brokering going on, right? That you might have a carrier who is signed on another carrier without adding them properly on their insurance. And a lot of times that happens where the carrier just has no idea what the implications are. And so that's a moment for us where we, give them a call. Hey, Dal, you hit your credit limit. Just, what's going on? Oh, Brandon's one of my good buddies. I signed him on as an owner operator. And then that's more, that's where that education comes into play. Like, hey, Dal, if there's an insurance issue, if there's a claim and it happens on Brandon's truck, it's under your authority. Your authority, your insurance will deny it. His insurance will deny it. So it's a good point for us to communicate and educate. And then the third is, let's see, we've hit the credit collections issues, added a truck. The third one is also a lot of times our carriers add a truck on insurance properly and they just don't even know about it. So it's kind of like, then they finally have that conversation. We're like, oh, okay, great. Send us the new insurance certificate. Now we're going to take you from 30,000 up to 60,000, right? So we open that up. And then the fourth instance, which is a factor's nightmare, is fraud. You know, if you've got a $30,000 credit limit and all of a sudden they're doing $20,000 in a week and you're kind of like, okay, what's going on here? You know, you have to kind of dig in. Right. Are they submitting fake invoices? So ours is 30,000, and that satisfies a good 45-day time period. And then from there, if there are exceptions, like we have team drivers, or if somebody just has a really good customer relationship, we evaluate it and adjust.
Okay. If you will, Tom, talk to us about the clients you serve, and you know, if there's some future in the future, if you're planning on doing an expansion on that, talk about that, please.
As far as on the brokerage side of things, or
yeah, you know, we talked about it. You are currently doing truck drivers right now, and you're also doing brokers, but veteran brokers. Is that correct?
Yeah. So one of my goal, my vision, and I come from the trucking factoring space, and so I kind of see that as being my you know, core competency. So I'm never going to turn down a trucking company if I can train and educate and do whatever I can. Great. Where we're kind of branching off and kind of taking the veteran aspect. My goal, if I can turn into the #1 veteran transportation factor that's out there in the country, that's kind of my goal. And if we can do that on the brokerage side, if we can do that on the construction side, if we can do that on the staffing side, that would be kind of, we're always going to keep our you know, main baby in place and providing service, but kind of looking at the USAA model of membership. And if it turns into something where we become where we've got that perfection on the freight brokering side, maybe we open it up. But currently right now, as we beta test and figure out our software and everything, we're starting it off with veteran, military, and actually we do first responders as well.
Cool. So now I noticed on your website that it says that your goal is to help clients grow their existing operation in order to qualify for traditional financing. So you don't see a factoring company as a long-term solution. Is that correct?
I'm going to give you a little bit of a good story. When I started my business, I worked with a factoring company. So when I started, it takes for a traditional line of credit for a bank to see you as being a viable, sustainable business, you got to be in business for minimum 2 years. I was lucky enough that I developed a lot of banking relationships and relationships out there in the space. So I bootstrapped my business to start off. I don't come from, inheritances, or, I don't have money growing in my backyard. So I bootstrapped. I worked with another factoring company who basically I was in a refactoring relationship. So whatever all the invoices that I was buying, I was actually kind of selling them off, so to speak. And I had a co-factor that was helping to fund this growth. And I did that for 2 years until I could qualify for traditional financing. The holy grail, sometimes it's harder for trucking companies. You have to get to that point. You have to figure out at what point you've scaled your operation where you can then reach out to your bank. Clearly, 2 years. And banks are very hesitant on the trucking space because a lot of times they don't understand it. I've seen in the industry that logistics companies can qualify for traditional banking relationships, more so because you're in the trucking business is a very working capital intensive, and it's very risky. You're hauling these assets. On the brokerage side, you're operating off trade credit essentially. You're waiting 30 days to get paid by your customers, and you're paying your carriers in 30 days. I've seen that it's easier to qualify for traditional financing on the brokerage side than it is on the trucking side. But I would say when trucks have been in business for 2+ years, and they can get to the 20-30 truck range, they should be going out and talking to banks. Right now is a terrible time. Obviously, interest rates are through the roof. But you have to weigh those pros and cons because and what your factor provides for you. So say, for example, you wanted to go out and get a line of credit with a bank, and it could be cheaper. When it comes to the cost of your capital, it could be cheaper. One of the things, I see this all the time on social media, that people will dog factoring companies and basically say, go out and get a credit card, the interest rates are crazy. What they're not speaking to that one truck operation owner operator who's out there on the road that's booking his own loads, that he doesn't understand that he has to do all the invoicing, billing, collections himself. He has to deal with all these different broker payables platforms that he has to log in to try to track his payments. Some are going to come via ACH, some are going to, there's all these different, you have to manage the payment process aspect. There is an administrative level support that a good factoring company does for you. There are bad ones that are out there. So you kind of have to weigh the pros and the cons. Okay, I've grown. I can possibly qualify for traditional financing, but now so that's a cost that I have to keep in mind. Now I have to hire an employee to manage the service aspect. And so do those costs together, do they save you money in the long term? And sometimes the answer is yes, and sometimes the answer is I'll stay with my factoring company and let them do my support.
Did I understand you correctly earlier when you said that there is no FICO score requirement? So you're not doing hard inquiries on credit when you are checking credit for?
We are not. I don't think most factors should. I'm more concerned about your customer's credit than I am your credit as your FICO score. Obviously things happen. There's bankruptcies, there's liens, there's judgments. Those all go into an underwriting variable. But at the end of the day, you're hauling a load for CH Robinson, you're hauling a load for Alliance Logistics. I'm more concerned about Alliance Logistics paying me than worrying about your bankruptcy that happened 3 years ago. So we don't do it. Some factors do that FICO score. I think that you should stay away from the ones that are analyzing your FICO background. I just don't think it applies.
Now, man, tell me this, man. What's the real deal on this recourse and non-recourse factoring? Is there really a non-recourse factoring? Because most times when I'm talking to factoring companies, most times they're going to steer you toward recourse factoring. And about probably 90% of people that I know are getting recourse factoring. Is there really a non-recourse factoring? Talk to us about the difference between the two.
Yeah, good question. So recourse, non-recourse, the only difference between recourse and non-recourse. Non-recourse protects you if and only if the debtor, either the broker or the shipper, files for bankruptcy and is insolvent. And that rarely happens. A lot of times you have somebody that they're going out of business or they're not answering their phones, or that's technically not a non-recourse protected event. So that's a big distinguishing factor, because what I hear in the misinformation that's being communicated is when they say, oh, well, we're true non-recourse. So if your broker doesn't pay, if your customer doesn't pay, we don't charge you back. However, there's always claims, there's always damages. If you didn't turn your GPS tracking on, there's going to be a $250 deduction. There's all these issues that take place in the transaction where they're coming back after you. So it's a little bit of a marketing gimmick. And the other thing too that I don't like is they say, okay, well, the non-recourse, if the broker doesn't pay, we don't charge you back. Therefore, it's more risky for us, because if we're assuming the risk, then we're going to charge you more. We're going to have a higher fee structure on the non-recourse side. Well, here's the piece of that. Us as factors, I've got all the credit software in the world. I know when Celadon was going out of business 3 months before they did, because their days to pay went from 30 to 60 to 90, and all of a sudden now they're filing for bankruptcy. If you're in that non-recourse relationship where the factoring company sees that Celadon or whoever it is that's going under, they're going to charge you back before they file for bankruptcy. So you're only protected in that very unique event that takes place. It rarely happens. So don't buy into the marketing gimmick.
So so if you go into a non-recourse agreement, will your customer be under a whole lot more scrutiny?
Absolutely, yeah. Okay. So if it's a non-recourse agreement, and that's something I've seen on social media too, where I've seen factoring companies that they will have differentiation. Well, they'll say, oh, sorry, you're non-recourse, so on that broker we won't approve you. But it's like, wait a minute, so on a recourse plan, so what you're telling your client is, yeah, go ahead and work for that broker who's got bad credit, because at the end of the day we're going to charge you back. I don't agree with that philosophy. We treat our clients and their broker relationships like they're non-recourse every time. I never want to have to charge a client back. I just think it's bad business. And again, that goes back to that kind of consultative relationship, teaching them about credit, teaching them what to look out for, what to watch for. Don't be working with some of these scammer fraudster brokers, and then we never have to have this issue. So it's just, at the end of the day, I think because the worst kind of nightmare scenario is that, you have a carrier that they haul that load for the bad broker, and then we deny it, and then they can't get paid by them. So if we can be out in front of it on day one and saying, hey, we have a broker watch link that we send to all of our carriers. We have an app that they can check that shows that they're denied. We've got over 300 brokers now on that broker watch link that we try to push to our clients, that they're on there on a daily basis, that they can search for those bad brokers. And it's just, telling them to watch out because of all the double brokering and fraud and scam that's out there.
You have a broker watch link?
Yes, sir.
Oh, that's great, man.
Yeah.
So that's going to give them a heads up on who's doing some bad stuff out there then.
We've got a very good pulse on the market when it comes to especially the double brokers. That's something we see 5 or 6 every single week, and it's just constantly adding and updating and getting from all of our resources and recommunicating that to our clients to stay away from these guys. So
okay, Tom, if we would, I'm going to switch gears a little bit and talk about broker credit. And of course, by that I mean, let's say that we are a broker would then have less than a year in business, and we post a load on a load board. Carrier calls you up about the load. You guys talk through the details of the load.
Yes,
they
sir.
agree to move the load. Then, of course, they go back and talk to their factoring company. Factoring company come back and says, hey, we can't approve this particular broker. They have an N rating. They don't have a sufficient credit history. Talk to us about how brokers can build credit with factoring companies. How does that work? Because we hear some different things out there. As a matter of fact, I have gone through and built credit on TransCredit. Of course, we started out on TransCredit and built some credit on load boards as well. But how do you get credit built with factoring companies in that Ansonia space?
It's one of the unspoken things that's talked about is everybody, it's most factoring companies when they're trying to sell with a broker client, they're like, hey, we help you build credit, but they don't tell you how it works.
Exactly.
So I love talking about this, the concept. I kind of like to give some tips. It's going to take, there's a lot of legwork. It takes you anywhere from 6 months to a year to start seeing some traction. The first tip that I would recommend, so I'm going to put on my credit hat, and how I kind of want you guys to think about it is, you're an 18-year-old kid that just got your first credit card. You have no established credit. You need somebody else to co-sign for your vehicle. You can't get a mortgage. That new business has to be treated the exact same way. That's how the market sees you, is that if they extend you credit, what's the likelihood that you're actually going to pay it? So I kind of like to give some tips on starting out. And number one, I think, is credibility and its branding. The big thing, us as factors, that we're looking at is we're evaluating you versus the fraudsters that are out there in the market. And so how do you differentiate yourself from these double brokering scammers that are going to be up in business for 3 or 4 months, and then they're going to shut their doors, leaving us with the bag and charging carriers back, or leaving carriers with the bag? So how do we know that you are a sustainable business that wants to be around for years? So first and foremost is credibility. I want you to build a website. I want you to have a Facebook presence, a social media presence. The other thing too, on the website, take some time. If you go to some websites and you click on the little social media icons down at the bottom, and you click on the little tab, and if it doesn't go to Facebook, you click on the LinkedIn. If it doesn't go to LinkedIn, that means you didn't spend some time on building out your branding. We're looking for those businesses that are trying that they're going to be around for the next 10 years. So website, social medias, get rid of your Gmail addresses if you want to be seen seriously. Now, on the trucking side, that's fine. But if you are a brokerage operation and you're looking for a factor to extend you credit, professional domain names and making sure that all of us as consumers, right? We all go and we look at reviews for a restaurant or someone to a barbershop or whatever it is to see if they do a good job. Same thing that you guys want to establish that credibility out in the market. One thing that's not really taught, there's this thing called Google My Business. And what it is if you establish your business and you have an address, and Google will send you a postcard that verifies your address, and it gives you that neat little box on the right-hand side where you can go to your website, you can click on directions, you can click on call, and people can give you Google reviews. That is because from a credibility perspective, you're not hiding. The fraudsters are hiding, but you are establishing. And the other thing is LinkedIn, right? It's when I have a brand new broker that calls me up and they tell me, hey, I'm trying to establish credit, and then I go on and I find that they have a website, and I find that they have a LinkedIn, and I can actually see them as an individual and see that they're the owner of the company. Chances are that person's trying to build a livelihood for themselves, right? So there's that piece of it. So number one is obviously building that credibility piece, and it takes some time and the initial phases to start that. And keep in mind when how we're evaluating, obviously getting the Holy Grail and Sonia score, that will come, but you have to take the steps to establish yourself. So social credibility, number one. Number two is I think that in the space you have to partner with a factoring company, and the reason why is because myself as a factor, my credit department is concerned that you're a brand new brokerage operation and you're not doing your due diligence on your customer. When I know that you're working with a factoring company, they are invested in making sure that they're getting paid. So I know that you have a partner who's monitoring your customer's credit. So it's almost like my credit department is not extending, your brokerage credit. I'm extending the factoring company's credit because I have trust and confidence that they're going to get the job done and that they're going to pay us until you start establishing that score and those payment terms. So I've got, I actually have a little cheat sheet here that I'm going to use. Over it. So I've got the factoring reference letter, and then you hit the nail on the head. The third thing is trans credit, and it's not the end all be all. It's not the Insonias. But if you go out, I've got partner brokerages that I get a trans credit report on, every few months. And I go in there and I fill it out, and it's not peer submitted data, but it's a good start to start. I think 123 LOADBOARD uses trans credit, so I mean you're getting some traction, right, from TRUCKSTOP and from 123 LOADBOARD. So those things are starting there, but it's not, again, with the Holy Grail being the Insonia. So then that way it shows up the debt. And so the next is obviously, all right. Here's a good tip. I always say, as a brand new brokerage, you should have a preferred carrier network and try to make that preferred carrier network as diversified as possible. So if you're a brand new broker, I would say start off 5 trucks. Now, how the credit system works with Insonia is I submit our credit data and it just goes through my software twice a month. So on the 1st of the month, the 15th, or the 15th and the 30th, or whatever it is, it sends the data out there to Insonia, and then they've got their algorithm that kind of develops a days to pay score. So basically, just like all of us as consumers, we have a credit score on us, right? So Experian, TransUnion, and Equifax, and basically on Tom Croteau, Chase, and my mortgage company, they're reporting my statements and my balances to the 3 credit bureaus. And if my credit card balance was $8,000 last month and now it's $6,000 the next month, well, they're developing a payment history to see that I'm paying my bills, right? Same concept when it comes to how it works. The factoring companies are almost like the credit card companies or the creditors. If I've extended Alliance Logistics $5,000 worth of credit today and I report that to Insonia, and then in 30 days, that $5,000 is now 0. Well, guess what? It shows that you're paying your bills, and on the algorithm, it shows that you're paying it in 30 days. So that's happening across the board with all different factoring companies. And so what I like to say, that preferred carrier network, try to get with 5 different carriers, and the goal being is having each one of them being a different factoring company. What the difference of the business credit versus consumer credit in this space, in the logistics space, is that we're taught as consumers, don't open up all these credit cards because that's bad for your credit. But for factoring companies, the way that I see it, the more the merrier. If you're working with 20 different factoring companies that have extended you credit, hey, I'm not the first one taking the risk. So chances are, if everybody else's credit departments are doing that, there's that herd mentality, right? So I'm more likely to extend credit to you. So try to get 5 carriers, and if they've got 5 different factoring companies, even better. But the next step is the hard part. The next step, you have to sell yourself. You have to call up the factoring companies. You have to call their credit departments. You have to speak to somebody that's higher up, speak to somebody that's in credit. And the big tip here, be proactive, not reactive. If you've got all this freight that you're moving, and all of a sudden you find a carrier, like that scenario that you just painted, and all of a sudden you find out that the carrier says, sorry, my factoring company is denying you guys, but you have to move that load for your customer tomorrow. Well, now you're calling up the factoring company in panic mode. Hey, I need this truck. I've got all these credit references. I can send you this. I can send you that. If you are proactive, calling the factoring companies and saying, hey, listen, I don't have a carrier that's working with you today. I want to send you an email. Here's my company. Here's my website. Here's my LinkedIn. Here's all, going through those steps. I want to make sure that if I do have a carrier that reaches out that I have a load for, that you guys are going to approve me. And you're going to get a good gauge and a good read on finding. And if they say no, be like, hey, is there a credit manager that I can speak with? And if you can let them know that you understand the game and how credit works, the scammers and fraudsters don't give a damn about this, right? So for us, we see that as valuable, that you're proactively trying to prove your credibility. So get your carrier network, get approval from factoring companies, and I got a couple of little tricks in here. I don't know if you want me to keep going, but I'm happy to.
Absolutely.
So the other thing too is avoid quick pays. So I know that for brokers, especially if you guys are signing up with a factoring company to work with you, do not buy into the quick pay program. The factor will sell you on saying, hey, I'll tell you what, we're offering this quick pay program, and I'm going to give you 2%. We'll take 2%, win-win. The carrier gets paid, everything's great, right? Here's the problem with the quick pay program is, think about in that scenario of us using our credit cards. If I take my family out to dinner tonight and I use my Chase credit card, and it's $100. If I go home immediately and hop onto my Chase platform and pay that $100, well, guess what happens when the statement comes from this month and the next month? Well, it showed 0 balance last month. It shows 0 balance this month.
Right.
So that's the same concept of quick pays. If you are paying a carrier so quickly, that information and that data never flows through to the factoring companies. Your goal is you want that transaction to be on the factoring company's books, so then that way they can report it to the credit agencies. I report to 3 different credit agencies. Cortera, we do Factors Network, we do Insonia. And that's all automatic. It goes out of my system. So if I have purchased an invoice today, then in 15 days or whatever the timeline is going to be, it's going to send off to the credit agencies, and so they're going to know next month or next reporting cycle on whether or not that invoice has been paid. And so you want it to flow through to the factoring software. So that's a big misconception out there, is avoid quick pays. And last but not least, you have to monitor your payables. For those of you guys who've probably been in trucking for a while, how often do you get an email from Sureway or US Express or US Logistics, whatever it is, that says, hey, I never got your invoice. Hey, I never got your invoice. Hey, but your factoring company may have sent it, right? Factoring companies make errors all the time. And the scenario that I like to paint is, we had a carrier where we did a load. We purchased one for Mega Logistics, and we build Mega Core Logistics. Well, 30 days go by, we call Megacore Logistics and saying, hey, I'm trying to get a payment status. Megacore Logistics says, this isn't our load, this doesn't belong to us, so we don't find out until 30 days. Now we submit it to Mega Logistics and asking them like, hey, I'm so sorry. And Mega Logistics' policy, and I'm just throwing out names out there, but if their policy is, I'm sorry, but we pay net 30 on date of receipt. Well, that's the wrong mentality, because guess what? I bought that invoice 30 days ago. So when you pay that invoice, you're actually paying 60 days on the way that it's reported. And I'm giving you an example of how factoring companies make mistakes like that, where it can negatively impact your score. So again, I've got my brokerage background as well, and I know that TMS platforms, they always have a load booking side, they have a load building side, a load booking side, in transit section, and then they have a load completed, but hasn't been billed yet. You guys need to be hawks in that load completed section, because if you have to assume that the carrier that delivered that load today, that they got paid today by their factoring company. And if you do not have an invoice for that, it might be a bad factoring company, or there might be something. You have to monitor that section like a hawk and be hounding that carrier and be hounding the factoring company and saying, I need your invoice, I need your invoice. Because if you don't monitor your payables, chances are that factoring company might be negatively reporting on your credit, which can take a long time to get cleared up. So I know it's kind of long-winded and a lot of information.
That was great, man. That was great. So now, as it pertains to credit, Tom, is it just about credit in reference you paying carriers, or is it like if you have a business line of credit with a bank? Is that something you consider, or how does that work?
As far as like if a brand new broker has a business line?
Right. And he's trying to build credit with factoring companies. Do you consider his business line of credit?
We don't even look at it, to be honest with you. Our main source, I want to know if the factoring companies are getting paid. And so Sonia is that end all be all. And they're the ones that give you that DAT score. And so and the only way to get there is that's all peer reported data from the factors. So if they've been approved by the banks and all that stuff is good, that's great. But I think and again, I think that the factoring company, and we said it before, it's a means to an end. And you're going to use that factoring company for maybe a year till you've established credit. And then afterwards, okay, I'm going to get my line of credit. Now, thank you very much for, being a reference, so to speak, and allowing me to start building those relationships. Now the factors trust me. I'm going to capture my fee for myself, and I'll be able to do it myself. So it's kind of like maybe the minimum, I think, a year working with a factor on the broker side.
Okay. Is it a red flag for you, Tom, if, for example, sometimes we have shippers that want to, do net 60. Is that a problem for factoring companies? No?
No, not on the broker, not on the, if I'm factoring you as a broker, that's not an issue, because I know that shippers typically have longer days to pay, because shippers' customers, sometimes they're bigger entities and they have multi-conglomerate customers and international customers. So if a shipper is 60 days, there's probably going to be maybe a little bit of an adjustment on your rate on that side. But at the end of the day, a factor is not too concerned with 60. I think a factor is more concerned on the brokerage, on the carrier side. So if I have a broker client, now if they've got strong credit and they've been in business for 2+ years and they've been 60 days and that's just their payment terms, we might capture a little bit more rate. Like for example, I think TSG Redwood, they pay in 60 days. We might charge a little bit more. We let our clients know about that. And so if it's known, and if I know that my capital is going to be out there a little bit longer, there might just be an adjustment on the fee. But at the end of the day, it doesn't scare you. Now what scares us is when it goes from 30 to 60 from 6 months ago, and you're like, okay, what the hell's going on? Why did that take months?
Okay. Dal, do you have anything?
Okay, can you hear me now?
Yes, I can hear you.
No, sir. I mean, you guys on a roll doing great. I would be more interested in if some of the students had something.
Okay, Tom, if you will, give me a second. I want to see what questions we have from the class. What is your rate, Tom, when it comes to considering a new broker or a new trucking company, a client? What is your rate? Or does that depend on the type of customer you're dealing, the type of client you're dealing with?
I'll give you kind of a baseline of what we offer for our one truck operations that start off for a one truck and irrespective of equipment types. We do a trial rate, we do an annual rate. We understand that on the trial side, there's a lot of bad information out there, a lot of people that are skeptical, and so they might just want to do it 3 months to start off with. So a 3.5% rate starting off, and that's flat. We don't do any reserves. Stay away from reserve models, and that's for 3 months. And then we also do annual, which is 3% flat, no reserves. And then we also offer those veteran and military discounts.
Tell us about that. What does that mean when you say 3.5%, no reserves?
Yeah. So, and I don't want to bad name any other factors that are out there, but right. A factoring company, what they might do is that usually stay away from the marketing, the shiny object of the 1% rates or the 1.5%. Typically what they're doing, say if they're offering you a 1% rate, is they do what's called a tiered structure. And so they will offer you 1%, but that 1% might only be good for 15 days. And so is that you have to ask, what's my advance rate? So if they're advancing you 95% of your money, but then they're telling you that there's a 1% fee, what they might not be telling you is that after 30 days, they might charge you 2%. So essentially that 4% difference, it goes into an escrow account. And so it's escrowed until the invoice pays. And so if the invoice hits 30 days, they might be charging another percentage point. If it hits 40 days, 45 days, they might charge another percentage point. 60 days, maybe charging another one. So it might be something where they marketed you with a 1% rate, but depending on your customers, which average customers we collect on every like 33 to 35 days is kind of what our average turn is. But so you have to keep that into the equation of like, okay, if it's a lower advance rate, are they holding a reserve? That reserve is usually used to, traditionally charge you more on the back end. So when that invoice actually pays, that's where a fee goes to them, and then what the remaining balance is goes to your cash reserve.
Okay. If you work with a factoring company as a broker, are you somehow seen less credible?
Oh God, I would go the opposite direction and say that. And here's the thing: once you've established that credit, though, that as a new broker, you're going to get approved through us working with a factoring company. If you've been doing it for 2 years and at that point you've established credit, yeah, I like the broker who doesn't work with a factoring company, because you've developed these internal processes and payment process where you got your stuff together, right? You know what you're doing. So I'm more impressed by that 2 years out. But in the initial onslaught, it's tough to separate yourself from the bad actors. So I like the startup brokerages working with a factor.
Okay. Jimmy says, if my trucking company, if my trucking company is already set up with a factoring company, should I set up with a new factoring company for my brokerage?
Really good question. So how it works on that, we talked about the UCC earlier, right? So they've got that UCC on your trucking business and on yourself personally. The factoring company that factors your brokerage, they will traditionally want your trucking side as well. And what that does is it mitigates risk in any fraud or any potential double factoring situations. So what's stopping you so if I've got Alliance Trucking and Alliance Logistics, I'm factoring Alliance Logistics with this other company with my shipper customer. And then on my trucking side, I'm getting the load from Alliance Logistics and I'm factoring it from this company over here. Well, it's basically you got paid twice, right? Alliance Logistics got paid and Alliance Trucking got paid from 2 different factors, but it was the same load. So factors know about that, and so they will look into that UCC. If you are planning, and I'll give you kind of tips, and I don't know if I should be giving you these tips, but if you're planning on setting up a brokerage entity that is completely separate, and maybe it's in your wife's name, and maybe it's with a different address, and it's a completely different legal entity, but you still want to leverage your trucking side, because at the end of the day, you got to have the asset side to get into the doors of customers, right? You want to make sure that you have trucks, because a lot of logistics managers like that. You have an asset side, and so you want to keep those businesses closely connected. But if you don't like your factoring company on your trucking side, then I would recommend thinking about either a wife or a family member, or setting up a different business structure that has a different address, so it actually is a different legal entity to work with a different factoring company that's probably a little bit more friendly than your trucking factor.
Okay. Monique asked, he says, I was wondering if I've had my brokerage for over 2 years and haven't done anything with it just yet, but kept my insurance. What would my next steps be? Will it be hard for me to start credit with a factoring write-off?
Yes, because again, the way to build credit, the best way is that Insonia score and that peer submitted data. So length in business is a good thing, right? It's something that's evaluated. We look at an MC and how new it is. MCs right now are in the 149 category. So obviously if we have a new 149, 7-digit long MC, chances are we're denying them. But if you had it open in the past 2 years and it's like a 105 range, that looks better. But from a perspective of credit, again, us as the factor, we're trying to see who you're working with, what other factoring companies have taken a risk, and we like to see some business transactions that have flown through that with the algorithm has been able to give us a determination. So the length is great, but you got to get out there and you got to put the work in, and you got to pay those carriers, and so that way it flows through the systems.
Okay. Jay says, what is the fastest way possible to pay carriers if I'm managing my own receivables? My current factoring company can pay carriers in 1 day. ACH takes longer than that. Any input you can provide on this would be great.
What's the fastest way? That depends, I think, on your bank, because our ACHs actually hit the next day. So I think that that's a banking relationship. But again, going back to that whole quick pay model, right? Stay away from the quick pay, because if you're trying to build credit, you want to try to get that factoring company to extend you credit. But if you're looking for a faster payment option for your carriers, I think that you might want to look at a different bank, because most banks are ACHs that will hit your account the next business day.
Okay. Jimmy's asking a second question, following up on the first question he asked. He says, I have a contract for my truck now where I don't use factoring any longer. So would that explanation that you just explained still apply?
I have a contract. Can you say that again, Brandon? I'm sorry.
No worries. He says, I have a contract for my truck now where I don't use factoring any longer. This is the guy that was asking earlier about, I think his question was, if my trucking company is already set up with a factoring company, should I set up with a new factoring company for my brokerage? And his follow-up to that he says, I have a contract for my truck now where I don't use factoring any longer. So would that explanation still apply?
The UCC is still going to follow you. So if that still is under your business or under your name personally, until that you can get that released, that's going to be difficult. So the goal being finish up, fulfill those obligations with that other factor, or find a factor, a broker factor who is willing to do a buyout to get you out of the other factoring relationship. But that UCC follows you for 5 years, so you want to make sure that you try to get rid of that thing.
Man, Tom, you've been so gracious with your time, man, and provided us so much value here tonight. I think I speak for everybody when I say we really appreciate you coming to the call tonight, man, because this has been super, super duper fantastic. Thank you so much for your time tonight. And we just want to say we really appreciate you, man. Thank you so much.
Yeah, Brandon, Dal, I appreciate you guys having me on. Anytime that you guys need some help or support, or your students need to reach out, ask me questions. I'm an open book. So happy to help out, and hope you guys have a great Thanksgiving week and enjoy time with family.
Before you go, Tom, can you plug your contact information so that everybody will know how to get in contact with you, how to find out more about Operfi and what exactly it is that you guys are doing over there?
Yeah, so obviously go to our website, operfi.com, operfi.com. My number, 682-330-7700. Feel free, give me a call, shoot me a text. I'll give you my email. It's tcroteau@operfi.com, CROTEAU. And so reach out. One of the other things too that might add value is I talked about our referral network where, we pay, and kind of the unspoken gem of the factoring industry is that we actually pay 10% commissions for the life of the deal for any client you refer to us. So if that one truck operation turns into a 10 truck operation, there is that hidden gem of residuals in the marketplace. So give me a call. I'm happy to explain more details, but anything that I can do to, and if you guys have a brokerage and you want me to look up your credit and just say, hey, give me an evaluation, what am I doing wrong? Reach out to me. I'm telling you, I'm an open book. I really enjoy this stuff. So feel free to give me a call and we can work together in one way or the other.
Hey, we certainly can tell that you love it, that you are all the way in 100%, man. Thanks so much. Tom, one thing before you go, repeat that contact information again for the audience, please.
682-330-7700, and you can call, you can text me. I've got it right here. If you want, I'll respond and let you know, hey, I got it. Or just go to our website, operfi.com. Give us a call, 888-OPERFI9, and you'll be able to go through, and somebody at my company will be able to transfer the call during normal business hours. But if you want to reach me after hours, 682-330-7700.
Again, thank you so much, Tom. Dal, do you have anything before we close out?
No, it's been great, man. Thanks, Tom. Thanks, Brandon.
Thank you. All right, Tom, again, thank you so much for being with us tonight, man. It was certainly a pleasure to have you. To our audience, thank you guys and ladies for being with us tonight. I want to just say, make sure that you enjoy this time with your family. Thanksgiving is coming up. Do some great things with your family. Every year, every time another year passes, those holidays continue to pass. So enjoy yourself and enjoy your family. Until the next time, see you at the very top, because the bottom is much too crowded.